Hey there, welcome to today's AbleSys update. Today I'd like to take a day to examine one of the featured charts on the site. And this is on the site currently. We did what we're calling the sweet spot analysis. And I wanted to do a video on this so we can see this as it develops on the chart. So this is the point where we have what we see as a sweet spot. Basically, prices are very close to the dots. If we bring ourselves and try to put ourselves in the moment, so we see here 76 3/4 using the previous level of dot, we have a potential stop set up there. So is this risk and reward favorable? And it's the key question that we want to ask ourselves. When we have the sweet spot setup, we systematically have a good way of setting ourselves up for a big winner. But how big of a winner could we potentially see? And is the risk commensurate with that potential reward? So this is the sweet spot entry analysis that we have for today's chart. As you can see here, it's the same chart that we're looking at in the program. And here's the entry. We were seeing that at 76.75, and at the time we had used the overnight high, and we'll take a look at that on the chart at 83.75. So that sets up a potential reward zone where there's about 7 points for prices to go up before they run into a roadblock. That's giving us a little bit of room and about $300 open, or $350 open profit per contract. Based on the stop at the time, we're looking at that at 26.75 and a half. That's going to leave us with, in order to get a 3-to-1 or better risk and reward for the trade, we need to have the entry come below 77 and a half. It gives us a solid basis to work backward from to identify if we have a good risk and reward. Coming back to the software, we can see the points marked out on the chart. We have the entry, we have the stop point marked here, and here's a roadblock that we didn't identify in the chart. This is the intraday high, and then this is the overnight high. So as the price starts to develop, we can see that there is a reaction, an initial testing period here, and before prices are able to get up to the intraday high, we can see that the stop or the dots have already exceeded the initial entry price, and the risk is out of the trade. Very quickly after prices break out, there's a very strong run of momentum here, and there's really no second chance entry until considerably later up here. There is a little bit of juice left in the move, as we can see here. If we continue along, we can see here prices getting a little bit further on, and with that initial 7 points potential profit, it actually ended up going up about 14 points before the trade ended here on the 1-minute chart. The closer the target is to the price, the more demanding we are with the potential amount of risk. I think the common mistake for traders is that we can examine a trade like this and think, okay, well, a winner here makes 14 points. So any amount of risk seems justified within that 14-point target. But in reality, we could have only potentially seen that there was a roadblock overnight about 7 points higher. And so using the tighter target tells us that we need a more demanding level of risk management for the initial part of the trade. It tells us that we need to be able to pick the turning point, or to time a trade where prices won't pull back more than 2 points against us. And fortunately, we did have this whole region here where prices met that criteria. The stop there is real tight. It's less than 2 points. And if we're able to recognize that at a glance, it would really set up for this great trade, because once it goes on, the momentum really just runs away from it there. All right, hopefully you're finding this content helpful. If you have any comments or suggestions, you can leave them in the comment section. And if you like the content, certainly give us a like or thumbs up on YouTube, and we'd certainly appreciate that. We'll be back on later this week. Have a good one. We'll talk to you later.